All right, hello, welcome traders. Second video today. So today I want to share with you five stock ideas. So five stock ideas for you that I found. I've also got a video I put out today on six futures trading ideas. These will be five on the stock side. So we're going to cover the trading account with futures. We're also going to cover doing some trading and investing with stocks here today. Hope you find some ideas, maybe put some things to use that make sense for you. We're having a great month. I covered it in the other video from today, but we are up in the trading account. Realized gains for the month, 28,973 plus in the investing account. We've also had realized gains of over $5,000 this month too. So we're up almost $34,000 in realized gains this month. So having a fantastic month. Hope you're also having a great month. But markets are pounding new highs almost on a daily basis. Some of these stocks are just bananas and out of control. Getting harder to find some trade ideas, but I'm going to share a couple with you right now that I found that I think are pretty good ideas. I'm going to share with you what these underlyings are. I'm also going to show you how I might be trading these tomorrow. We'll see what the market has, but I would like to get some trades on, and we'll share with you some great trade ideas. All right, so let's jump into it. Let me screen share and move on over to our charts. And first one's going to be on AMD. And what in the world is going on with AMD? While everything else in the semiconductor space rocketing, hitting new highs, except for Nvidia lately, which has tipped over, AMD just cannot get out of its own way. This stock continues to fall and drop and drop and drop. It is not my favorite underlying. From a long-term hold perspective, don't love this company. I think management's okay. I think the product is okay. It's just something's just not right in AMD land. And I don't know if it's just traders or investors just don't love this thing. But I think now it's getting to a point where you got to start to take notice of it. Why? So number one, this thing has just dropped like a rock from 227 all the way down to 125. So almost a 50% haircut on this thing since April. So we've seen just a gigantic downtrend. I can keep extending this line uh, further and further and further, which certainly makes it start to be a little bit more interesting when you start to think, you know, are we getting closer to a bottom? I don't know. It broke this uptrend trend line, and now we're sitting at a support area. We've seen this area as a previous resistance level, also act as a support level, especially right back here on August 5th, which was the low. Then it started to move back up. And now today we're back down to this 121.8-ish level, 121.5, something in this area. So this 121, 122 level, I think is an interesting level to be at. Now, if we're looking at the stochastic momentum, well oversold. If we're looking at RSI daily, pretty close to that oversold territory, almost hitting it today, getting close to it here. We're in a squeeze. The momentum is down, but you're starting to see maybe, you know, some sideways MACD. MACD's not doing much of anything on the daily. Squeeze has fired to the downside a bit, so we've seen that, but it keeps finishing off the lows of the day. You've also right at the bottom of the Bollinger Band. You're right at the 3 ATR level, which is starting to flatten out a bit. I think this is setting itself up for a trade opportunity here in AMD. One of the ways I would consider to play it would be either an in-the-money buy right, which means we might buy the stock here and write an in-the-money covered call, a strategy that I like a lot. And that's just for a short-term trade, looking for a bounce, maybe like 30 days. I probably would be doing weekly in-the-money covered calls on this thing. So if it continues to drop, I'm pretty well protected on this thing. And if it does rise, we're going to collect some great premium. We're also going to get, and even though we're in the money, we're going to collect the premium, and the loss on the intrinsic value of the call will be well offset by owning the stock and the gains in the stock. So either way, if the stock moves up, we're going to win. We're going to keep the premium that we sold. And then also, um, if we do slip a little bit more, we're going to offset any losses there and continue to generate some premium here. You could also be looking at a put credit spread here, a nice defined risk trade under this, probably under this 120-ish level. Let's give this a day to see if we can get some kind of a reversal in here. And if it does and starts to bounce or holds this 121 level, I think a put credit spread's not a bad play here. It's also, in my opinion, worthy of a potential poor man's covered call. Now, I like the strategy on the poor man's covered call. I would still potentially sell in the money covered calls against it, but if I bought the poor man's covered call, it would be pretty expensive. I think we could go and buy something around, and let me take a look here. I know I'm not sharing my charts, but let's go ahead and do that. Let's give you a sense of what this looks like. Um, in here, if we were looking at our accounts, I'd probably only go out about 150 to 180 days, somewhere in this May, June. Let's just say we go out to May. I'd probably sell something around this 100 or buy the poor man's covered call somewhere around that 100 level, which is right at the expected move. It's right around the 80 delta. I like that. It's only going to cost us, uh, you know, $3,000 if you're buying this on uh, cash secured essentially, and with our portfolio margin, or just Reg T, about $1,500 in margin. So not much there, but if we start to rally from here, you've got the good opportunity. And then if I'm selling the in the money, we'll probably do like a 10-day, and maybe I would do something around the 120 level here. So I could sell the 120. So it's in the money on this one. The nice thing here is we're going to get a buck 83 of extrinsic value. So we're going to for sure make the buck 83. In fact, let's take that off, and we're going to make 180 bucks roughly using $1,500 in margin. We're going to make this 183. If we stay above the 120, we're going to make 183 bucks on $1,500 in margin, which is 12% in 10 days. If we fall all the way to 120, we're going to keep the whole doggone premium of $655, which is massive and awesome. We're still so that we're going to book $655 on that $1,500, which is going to be closer to almost 44% return. Yes, the underlying will have dropped, okay, but we've also are going to keep this premium, which is going to pay for roughly a third of that. So I do like this opportunity on AMD. There's one with some different trade opportunities for you. Number two here is HIMS. Okay, HIMS. This thing is certainly off to the races, moving its way higher. You're in a bit of a ascending triangle that you have here. So this ascending triangle with resistance up around 34.86. Bouncing off the 21-day moving average, moving its way higher. Sold off a little bit today after some decent update. So I do like where this stock is. I think it's got some momentum to the upside. I think you could do put credit spreads on here. I also would consider doing something along the lines of what we just did, and that would be a in the money call with a poor man's covered call. So an in the money poor man's covered call is something else I would look for. Gives me a little bit of downside protection if things do reverse, okay? But also it's going to give me a pretty nice, if we move to the upside here, we'll make some pretty good money on that. The underlying will increase. We'll keep the premium. So both of those will be a benefit. You can also write at the money or slightly out of the money on the covered calls. Either way. I also really like the in the money buy right, which means you could also buy the stock right here at $31, and you could sell and in the money on that and just try to capture maybe a little bit of a move back to this resistance level here. So let's take a look here at HIMS, we would only do about 10 days out. I know I'm not sharing my screen, but you guys could always look this up. If we sold, let's say, the 28 in the money covered call, so we buy this thing at 31, we sell the 28 10 days out, we're going to take in $4 on that. Okay, 87 bucks of that is extrinsic. So we're going to make $87 on a stock that's going to cost us, 3,100 without margin. So we're going to make 3% in a week. If on margin we actually bought the shares, okay, those shares would only cost us about 1,500 again. So now you're looking again at making, somewhere in the neighborhood. If it stays here and moves higher, you're going to make 87 bucks on 1,500. Just doing the buy right itself, we'd be out of the trade by the weekend or by the end of next week. That'd be a 6% return. Now, if the stock drops to 28, we're going to keep the $4, which means we're going to lose $3 on the um, on the stock, but we're going to make $4 on the covered call. So we're still going to make $1 uh, on this thing, which again is going to be about $100 um, on this trade on 1,500. So 100 on $1,500 is about 7%. So if this thing drops to 28, yeah, we make 7%. If it stays here or moves higher, we're going to make 7%. So good shot either way. And if it rockets higher, we can get out of this trade. So I like HIMS. HIMS is a good opportunity in here. Mara, same type of a setup. This very similar looking chart. Stochastic momentum on the daily is oversold, starting to curl up. MACD starting to curl up. RSI is starting to rise. We're getting into a squeeze. If we look out here on the weekly, you're in a, you're firing a squeeze to the upside. Things are tempering, cooling off just a fraction on this thing, but still above the 21, which is above the 50. 50 is about to cross the 200-day moving average. I think Mara is a good looking trade. You've got all kinds of setups here. You can do anything that's long. You can do put credit spreads. You can do the buy rights, as I said, the in the money buy right here on this thing. I'm not as worried about this thing dropping down, so I don't know that I would do that. I could certainly do a poor man's covered call on this thing. There's a couple different things you can do. You can just buy the leap if you want, hold on to it. But I like where Mara is in here. Let's see how well that continues to perform. All right, Airbnb. We may have talked about this the other day. This thing is down at a support level. It's a bit a bit oversold here. Okay. You broke out of the downtrend. You broke sideways out of that. Okay. We broke the downtrend. We came back down, tested the downtrend, and then we've consolidated sideways. I think Airbnb is just hanging out in here. If we get a continued rally off of here, I think selling put credit spreads probably below the 3 ATR, about the 125 level. Not a bad opportunity for Airbnb. And my last one here is Nvidia. Okay. This thing has certainly taken a pretty good beating, dropping from 152 all the way to 130. So a 20% drop on that has been a 15%. It's in correction territory, 15% pullback. Okay. Doesn't look like it's pulling out of this tailspin anytime soon, but it's Nvidia, and at any point in time, this thing can move its way higher. This is technically a head, left shoulder, head, right shoulder, head and shoulders pattern, breaking the neckline. Can we drop down to 115? Absolutely. So do I want to get in front of this thing right now? I'm not enthused about it. Let's give it a day or two to see if it can catch. But it is at the bottom of the Bollinger Band on the daily, which is important. I think you could see a bounce potentially here. Even though it broke this neckline, doesn't mean it has to go all the way down. It's Nvidia. It can do anything the heck it wants here. The momentum is definitely down. You've got an uptrend line that's starting to sneak in here, right around the 120 level. 3 ATR about 125. You're at the Bollinger Band. Everything on the weekly looks a little bit more weak, so I think you give it a little bit more room. But I think if you want to take a poke at something as far as like a leap longer out here, I think Nvidia, while it can still go lower, I think you could still do, and I'm going to go back to the in the money covered poor man's covered call. I think this is a great idea. So I think you could buy the leaps on Nvidia. And let me take a quick look here. Um, yeah, let's look at this thing on a portfolio margin account on Nvidia. This could also be an in the money, I think, an in the money um, trade. So not NVDA, NVDA. Let's take a look at it. All right, let me switch screens so you can get a sense of what this trade looks like here. All right, so I think I would be looking at going out a ways. I mean, maybe you can even go a year out on this thing. Probably buy something at the 80 delta around 95. Okay. Would you want to, would you be okay at 95? I think if this thing even comes down further, I still think 100 is the level you'll start to see a ton of buying coming in. We could do the 100. I mean, we could do the 95. Let's say the 100. So you buy the leaps on the 100. These leaps are going to cost you on a portfolio margin account. Okay, it's a $45. It's the 100, 367 days out. 1262 would be your margin cost. Again, if your portfolio margin, if you're not, it's going to be closer to about $2,200, which is still great. So you can get in 100 shares of NVIDIA at 2,200. And let's just do, again, we'll just keep doing these in the money calls, which is going to give us uh, an opportunity to earn money on the extrinsic, okay, as well as giving us some protection. So we closed at about 130 here today. I'm saying sell the 125s for next Friday. Now you're seeing here that you can see in this column, $1.39 of this is extrinsic. So you're going to take in roughly 140 bucks worth of extrinsic value that should all, no, actually should, will decay by next Friday. Remember, we only paid $1,262, okay, for the 100 strike a year out. Okay. Do you think Nvidia will be over $100 a year out from now? I certainly do. I think this thing could be in the 200s by then. So I certainly think even if the market kind of holds sideways, I still think we're going to be in the mid 150s or so or better on Nvidia. So I still think Nvidia grows. Is it going to keep growing at 100% a year? Maybe not. But let's say this thing grows at 50% a year. Well, 50% from here would put us probably at 130. 50% from 130 would put us, what is that? About 190, 200. So I think somewhere between 150, 200, certainly realistic for Nvidia. I'm selling the 125. I'm in the money. And you're thinking, oh, you're going to get assigned. You're going to lose money. Well, no, I'm not going to get assigned and lose money. Okay. If I get assigned, I can close that out. Okay. But I will have made the money on that. Okay. The odds of me getting assigned, prior to a day or so before expiration, unless, I'm deeper in the money, are not very realistic. But what I'm looking at here is I'm collecting $7.15. I'm collecting $715, of which $5 of that is a little bit more than $5 of that. Uh, at the 125 to the 130, I mean, $5 of that, so almost $2 are extrinsic. Really should be more. But got about $2 of extrinsic in here. It's saying $1.39. Fine with that either way. So if we stay above 125 on this, we're going to keep all $700. $715 using 1262 is a 57% return on our cash by next week. Okay. Now, that's assuming that we drop all the way down to 125 or so. If we stay above here, okay, depending on where we are, we're going to have intrinsic value. So if we drop to 125 or lower, okay, we're going to make 50% on our call here, and that $700 will offset a lot of the 1262. Right? If we stay at 130 or anything above 125, we're still going to keep the $130, $140 of extrinsic. So we're still going to make 10% on this trade by next Friday. We're definitely, either way, no matter what, we make 10%. If it drops to 125, we make even more, as I said. If so, we're protected 5 points to the downside. We've protected our leaps by 5%. If we stay at the 130, okay, and this expires, it's going to cost us $5. Okay, so we're going to lose a little bit uh, of that piece if it stays right where it is, but we're going to take in again all of that extrinsic, and our leaps won't have moved at all. So I think it's a good opportunity trade here. If we stay at 130, we're selling it for $7. Okay, we can close this thing out at 130. This will be worth essentially $5. We'll keep the two. Okay, we're going to make $200 on this trade. If we start to crank higher on this thing, then it's all good. Then we're going to keep making. Let's say it goes to 135. Okay, at 135, okay, we're going to be $10 in the money on this thing, which means we're going to lose $3 on this trade, but we're going to have made $5 on the longer leaps, roughly, which means we're still going to make a good amount of money on this trade, probably 10% in a week. So I like the Nvidia trade here. Does it have more room to fall? It potentially does. So, but I think this gives us an opportunity here on this pullback to buy those leaps at a spot that I think we'll be happy with next year. And by selling in the money covered calls against it, okay, we have a way to capture that extrinsic value. We're going to keep the premium. The extrinsic premium we keep no matter what. Okay, if it falls, it's going to help offset our losses on our leaps. If it gains, we keep the extrinsic. Either way, should be a winner for us, and we're going to still keep the extrinsic, and we can keep doing it again the following week. All right, hopefully this was helpful for you. 5 stock trades: HIMS, Mara, Airbnb, AMD, and Nvidia. Have a great rest of your evening, folks. If this was helpful to you, give me a thumbs up down below. If you're not a subscriber to the channel, subscribe. Okay. If you got any value out of this at all, give me that likes up. Okay. Share it. Helps the algorithm. Helps us get people engaged. I just want you thinking. I want you learning. I want you to try some new things. Okay. I want you to be able to protect what you have. Okay. But I also want you to make some money. Stay safe out there, everybody. Bye-bye.